Welcome to my $100,000 stock experiment, Sell Rules, episode number 5. I'm sharing my stock journey as I practice and develop my sell rules. This isn't an endorsement to purchase any stocks that I've bought, nor is it an endorsement to purchase stocks in general. I was super busy personally during weeks 10 and 11, and I didn't do a good job of capturing stock activity. I'm going to suggest that if you are purchasing and selling stocks, that you go ahead and do a screen capture of the chart on the day that you buy or sell, or within a day or two of that. Week 10, I sold HEIA and I bought PayPal and ISRG. Week 11, I bought MMI, and I will go into the purchase and sales with the charts this week. This is a MarketSmith chart for Intuitive Surgical, ISRG. I purchased this stock on June 12th, 2018 for $489.70. A lot of people don't like buying stocks that have a high price, but it really doesn't matter if you buy a stock for $20. If it goes up 10%, you're going to make 10%. And if you buy a stock for $200 and it goes up 10%, you're going to make 10%. So it really, the price of per share price does not uh, influence a buy decision for me. I like this stock because it had a really nice run from January to November 2017, where it increased 74.5%. It went from $228 to $398. After that, it had 3 periods of consolidation where the price is fluctuates but in a specific range, and it doesn't ever really break out of that range. It did, however, break out of that range in the last 3 weeks, and MarketSmith indicated that this is a pivot point, which is an ideal time to purchase the stock should it be a stock that you want to buy. That's shown by the blue bar up on the top that has the green arrow that's pointing to it. That range is usually a 5% range from the time that you should buy it until the time that it does not is gotten past that point. And it's showing at the top right hand side that it's up 4% in the last 3 weeks from when it entered that pivot range. I also like the volume action, which I've circled down at the bottom in a green circle. It's showing that the last 3 weeks, the stock has closed up 3 weeks in a row for each week, and 2 of those last 3 weeks closed above average volume, and the last week is right at the average. So I like this stock and I bought it. I also purchased PayPal in week 10 of my $100,000 stock experiment. PayPal holding symbol is PYPL, and I purchased this for around the same reasons I purchased ISRG. It had a really nice price increase in 2017. It had a couple of periods of consolidation. It's near the MarketSmith pivot point, and it also had a new relative high strength rating of 86, and that means that this stock is outperforming 86% of the other stocks in the IBD database. The volume action here is not as good as the ISRG, but it did close in the last 6 weeks up, and I purchased this stock on June 13th at $85.10 a share. I also sold Heco Corp this week. The symbol is HEIA. I sold it on June 15th for $74.75. I had held it 8 weeks and it didn't do anything. So out of my portfolio. The chart on the right it has $60 and $50, and I don't see 74 or 75 on there at all. Well, that can be explained because there was a stock split. Since I didn't capture my chart at the time when I actually sold it, and I'm recreating it several weeks later, it is showing the price adjustment from the stock split. So on June 28th, there was a 5-for-4 stock split, which means for every person that held 4 shares of that stock, now they have 5 shares. So my 74.75 is really only worth 80% because what used to be 100% at 4 shares, now my um, price got adjusted for that stock split as well. So I still own the same total value of that stock, but the share price gets adjusted down and my stock number of shares gets adjusted up. So I sold it at 74.75, but that on this chart is really reflected at 59.8, and it's that green arrow pointing to the price. And then where I purchased it, 80% of the 74.50, which I paid for it, is really represented at 59.6, the orange bar on the left. And this stock was a big winner, literally not at a $34 profit. This chart was taken in July 20th, so you can see now it has performed better and it reached a pivot point again and it is on its way up now. So I don't own this stock anymore, but someone who has held it in the last 5 weeks would be happy with that 5% gain. I purchased MMI week 11 of my $100,000 stock experiment. It's called Marcus and Millichap Inc. I bought shares at 38.60, just at the top of the MarketSmith pivot point. There had been 3 weeks of consolidation that you can see there by the dotted green lines. And down in the volume, you can see the last 3 weeks, the volume has been increasing. It had a down week before that, but it also, and then 3 weeks before that, it also had 2 above average volume weeks that were positive. So the volume action there is good. This, I hope you can spot a trend that all 3 stocks that I bought in this 2-week period all had periods of consolidation, and they were all near the in their pivot point range. At the end of week 11, June 27th, 2018, I'm up $23,635 compared with a $3,711 increase for the S&P 500. I think it's awesome and I can't wait to see next week. Here's an individual breakdown of my stocks. You can see that Tandem is still screaming, and Weight Watchers on the right-hand side is doing well also. As I mentioned at the beginning of this presentation, I was super busy these 2 weeks, so I really wasn't paying attention. Had I been more on the ball, I would have seen that Red Hat is below that bar, the 9,200 bar. So I'm losing money more than I wanted to on my Red Hat. And I'm going to go back and check my alerts and see if I just got one and failed to pay attention to it. But definitely a mistake. But as you saw from the previous chart, I'm still up. It did not tank my entire portfolio. So you can make a mistake here and there, and it's going to be okay. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel.